Hey guys, welcome back to another video by Fully Informed Trade, or 5Trade for short, knowledge for everyone. My name is Alex Cho, and today I am going to be talking about the Standard & Poor 400 Index ETF, well not Index ETF, but this index. Okay, so right now the markets are trading close to that 1,277 area, and the thing that kind of interests me right here is that it's been able to break below that 200-day moving average. It is lower than the previous candlestick. It really hasn't confirmed. We haven't seen the market close yet. But if anything, Spain is getting a bailout now, okay? And the thing is, Spain is a humongous economy, and it requires the cooperation, I guess you could say, of all the major EU states, the five majors. And the thing is that I don't know if Germany is really willing to come up to the table and say, hey, you know what, guys, we're going to pull out every single weapon we have in our arsenal to get this thing fixed. Germany is not willing to do that. They keep on dragging their feet, dragging their feet, dragging their feet. We're not seeing something like a toxic asset relief program like we saw back in the United States a couple years ago. Nobody is willing to do that. It's unpopular politically. And I don't care if it's popular or unpopular politically, it has to be done. Otherwise, markets will continue to fall. The German bond market will eventually reverse its low yields. So they're probably going to rise pretty soon at this rate because people are starting to lose confidence. If Germany leaves the Eurozone is pretty much toast, of course, because again, it would be really, really unpopular politically. But like I'm saying, I'm not going to say Germany is going to leave the Eurozone. What I'm saying is that Germany needs to be a leader amongst the EU nations. And until we see a clear signal of that, and I don't mean a minor signal where people are waving their hands around and just going through the motions of leadership. I'm talking about some form of dedication, not some ridiculous budget that people are going to put other EU nations on. Because unfortunately, and this is what kind of George Soros kind of mentions in his latest book, which you guys should probably go and read. Some of it is not really that intuitive to understand. But he basically said this about Germany. The issue with Germany right now is that they have imposed budgets, okay, on these nations that they're never going to reach, not even in the short term, not even in the long term. And if they do put those budgets in place, chances are you're going to have a deflationary spiral in the Eurozone, and you're going to have the euro continue to gain value, but against a basket of currencies is going to actually fall in value. So maybe Germans or European exports might become more competitive and imports will become more expensive. And you can say that's kind of a beneficial thing for domestic producers. The only problem, though, is that it hasn't changed the underlying economic problem, which is deflation. You have to solve deflation. You have to get rid of those imbalances in the economy somehow. And right now, you have a lot of money hanging out in Germany. You don't have much money hanging out in the European periphery. All of this has to be solved. So, and Germany, has to think beyond itself for once and get its act together. Spain, is probably going to get a bailout. I'm pretty sure it will. That's what, when Greece got their first bailout, but, the whole stock market had a nice little rally. But, if Spain has to come back to the table again for, many more rounds of bailout, it's not going to be a very positive signal for the market. So, to me personally, I don't really consider this good news. I think that it's still bad news, and I believe that so as long as this negative information continues to come out of Europe, the fact that Spain has to come out and get a bailout, that also means that Italy might have to come out and get a bailout. France might have to come out and get a bailout. And the fact that we have to call it a bailout is what's disturbing to begin with, because a bailout means that it's a last resort, and then we keep on saying, oh, it's another last resort, it's another last resort, it's another last resort. Unfortunately, there should be one mechanism that should be used, and that is to inflate the living crap out of Europe right now. That is the solution. That is the only thing that's going to fix this, at least over the short term. And eventually, you can drain the liquidity in the system by raising interest rates to drop, to artificially create deflation. But right now, an inflationary spiral is the last thing that should be on our minds. Right now, we should be really worried about a Great Depression happening in the European Union at this moment. Take care, folks. If you have any questions, leave a comment right below.